Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco and my partner, Hari.
Hello, how's everybody?
How are you guys? It's been a long time since we recorded this. A lot has happened. Obviously, the summer, both of our work has been kind of really consuming. So thank you guys for the patience. Thank you all for, continual listenership. It really means a lot to us. In this episode, we're going to be talking about Visa. I'm sure all of you guys know Visa because it is pretty much ubiquitous across the world. And it's a really interesting company. We're going to focus heavily on the competitive advantage, why it is such a wildly successful company. We'll do that in a kind of in a different fashion this time around. It'll be interesting to go through this exercise together with you guys. But first, Hari, can you give us a disclaimer?
Yeah, this is the Value Investor TV podcast. We are not financial advisors. We are we are just trying to educate you and entertain you with regards to value investing, and explain the concepts that undergird value investing. We don't know your specific financial situation, nor do we know, are we acting as your financial advisories? So if you need those services, please consult with one before making any investment decisions.
Yeah. Before we jump into the checklist, I just want to make a comment about the checklist. If you guys don't have a checklist, the checklist that we put together to analyze companies, please do reach out to us at info@valueinvestor.org or tweet us at valueinvestortv. And, not only the checklist, if you have any questions about value investing or, any kind of questions or concerns that you guys might have, please feel free to send them over. And also, if you want us to break down a company, we're doing Visa today, but this is also actually came from one of our listeners. This was a request that was sent to us. So please send it out to us. That really helps us with, engaging with you guys and also just making sure that we're producing content that people like. So awesome. So let's go down the checklist. Hari, the first off the bat, what does Visa do? And a caveat here is that you should be able to answer this question relatively succinctly. So how would you describe Visa, Hari?
Yeah, so Visa is they are the underpinnings of the credit card that you probably have in your wallet or know somebody with a credit card in their wallet. And they provide the back-end services that allow you to use that card at merchants. And they, essentially authorize the transaction and make sure that the payment, goes through while not taking any risk, as associated with that thing. That's your financial institution. So their actual customers are not not the end user with the business or the individual with the credit card. They're actually the financial institution like Chase or Bank of America who issues the credit card or the debit card or and they provide the services that allow that transaction to occur.
Yeah, so for people who might not know, Hari, why is that a critical part of this whole infrastructure? Why can't banks just transact this? Why can't Chase do what Visa is doing?
Yeah, so it's actually a really good question, right? And I think this will be why we're going to spend so much time today talking about the competitive advantage or the moat of Visa is that fundamentally so Visa started in 1958 as they were called Bank Americard, and they weren't called Visa until 1976, and they didn't actually IPO until 11 years ago. So Visa always has provided the network and the technology that allows for this transaction to occur. They don't actually provide the cards. So when you swipe your credit card, the merchant will receive money for that from your financial institution. And then within a certain period of time, 30 days usually, you have to pay back your credit card institution, right? So the credit card issuer actually assumes the risk because they're basically providing you a short-term loan, right? But in order for this transaction to occur, there has to be an agreed upon thing that the merchant has to actually take into account, which is they have to have the card reader. Somebody has to issue the card to you, and then do a credit profile to see if you're actually worthy of that, risk. That's why they pull a credit history and do these other things. So when the actual transaction occurs, you swipe your card, it goes to Visa's server. Visa says, yes, this is Becco. He has an account with us. This is his credentials. And it functions essentially like a digital transaction, with Amazon or something like that, with PayPal. But the underpinnings of this are 50 years before, 30 years, 40 years before the internet was ever really around, right? And so this transaction process that happened is far older than, that. So Visa has upgraded their network to the point where now they can handle thousands of these transactions per second. But in order for and then they've layered on all of these other services like fraud detection, ensuring that, now in the last 3 or 4 years, they've included chips on every credit card so that chip, you're not actually sending your credentials, you're not sending your bank information across from the retailer, you're actually sending a token that is unique to that transaction, which identifies you with Visa. So that all of that process, has happened over the last 60 years, right? So 61 years that since Visa has been around, they've layered all of these things on top of that. And they have all these relationships with financial institutions, 59,000 of them, with merchants, in the millions, and 54 million businesses and merchants have, and there's 3.3 billion Visa credit cards or debit cards out in the wild. So, if I were trying to make a new, transaction system, I would have to have all of these things in place. My card reader would have to accept Visa and communicate with Visa, right? My transaction, I would have to have relationships with financial institutions, and I'd have to have relationships with merchants, these intermediate groups that provide services to merchants. And these are things like Square or Stripe or other things that, and there are far many more than just those two, that provide services that support the merchants and so on. So it's a multi-layered thing. Every swipe is not just between you and the business where it occurs. You're actually involving Visa. You're involving the financial institution that's, backing that transaction. You may be involving a third-party group that is like Square or Stripe or something that actually supports the merchant and provides them data, back to, to support this. So there's a huge network that underpins all of this.
Yeah. If I could kind of break down, and correct me if I'm wrong, Hari, if I could break down all that, all of the kind of different parties involved in this whole transaction, this whole ecosystem, you first have the financial institutions, and then you have the kind of like the like rails, if you will, like pipes, which is Visa, and then the terminal of that pipe is where the merchants sits.
Yep.
So if you could break this down into kind of 3 buckets, you would have the financial institution on one end, Visa in the middle as a transaction layer, and then the terminal, which is on the other end. That's where the merchants would sit.
Right. And so Visa calls this the infrastructure that underpins all this Visa Net or the Visa network. And so that process, used to be all on paper and all transactions were handled on paper when this started. Now this is all digital. So every transaction you make that connection, it goes to the internet. Visa has 4 data centers across the world that process 65,000 transactions per second, or they have the capacity to handle 65,000 transactions per second. And every transaction that occurs is verified by Visa and then passed on to the financial institution, who will then provide the cash to the merchant to make sure that they get paid. And now Visa doesn't set the rules for how that transaction would occur. But for the most part, I think the merchants will get paid, fairly quickly after the transaction occurs, like within, a certain amount of time.
Yeah.
But
yeah, for sure.
So
you're saying, Hari? Go ahead. Go ahead.
Yeah. The, there's this entire process, just to give you the scale of that. There are $17 trillion worth of cash transactions that occur per year. Visa, that's cash. So just in between individuals. Visa processes $11 trillion in transactions on its credit card network, or on VisaNet every year. So, there are other groups that are involved in, this MasterCard, Amex, and so on. And we'll talk a little bit about those. But, just from the scale of that, they are processing $11 trillion worth of payments. And that's growing, fairly big. And in the last, in 2016 was the last year that cash was actually a larger percent of the transaction volumes than credit cards. Now credit cards makes up the majority of transactions. So, that kind of gives you an idea of what, Visa started out 60 years ago with basically nothing and is now processing, a third of the volume of, transactions for the world right now.
Yeah. I mean, you start off by saying that, just to give you guys more context on the scale of this thing, I mean, it is massive.
Yeah. You're
talking about handling the world's financial transactions, single-handedly. A third of world's financial transaction happens through a single company. I mean, that is a scale of, biblical proportion. This is massive.
Yep.
Yeah. Cool. So let's move on to the next question. I think we covered on some of this stuff.
Yeah.
But the second question is competitive advantage. Does the company have a competitive advantage? Describe them in the categories below. We talked about some of this stuff, but let's go down the list just so that we're not missing anything.
Yeah.
So first is brand. Is there any competitive moat around brand for Visa?
Yeah, absolutely. And, Visa is actually a big sponsor of a lot of sporting events like the Olympics and FIFA. And so the name Visa carries with it a lot of clout, right? Because you can walk to basically 160 countries in the world and they will accept Visa in some form or fashion, right? So the Visa brand actually also, just to give you an idea, generates about $900 million in licensing revenue just for Visa itself. So it's it's a well-known brand. I mean, I think you could probably poll, everybody in the U.S., 99% of them have heard of Visa, I think is probably a safe assumption, right? And if they're getting a credit card, if you go to a website like NerdWallet where they tell you about credit cards, the vast majority of the credit cards that are being offered are actually from Visa. So, as far as that brand goes, it's a well-known amongst individuals. It's well known amongst retailers, and I'll just give you an idea of how many cards Visa has. Is 3.3 billion credit cards that they've issued. MasterCard is 1.8 billion, and for comparison, Amex is 113 million. So just from the scale, Amex is, Visa is 30 times the size of Amex in terms of cards that have been issued.
Yeah.
Now, Amex is a different business, but
yeah.
MasterCard is very similar, and Visa is almost double the size of MasterCard.
Yeah, it's crazy. Their second competitor, again, this is kind of going off on a slight tangent, just talking about competition, but its competitor, its main competitor is half its size. It almost kind of reminds me of NVIDIA a little bit.
Yeah.
You got NVIDIA and then AMD, and the scale and the product comparison is it's quite similar to what we see here with Visa and MasterCard. Would you agree with that, Hari?
Yeah, I think I would make the case that Visa has a larger lead ahead of MasterCard. But yeah, I think it's a fair comparison. Typically in a you'll see this in most businesses. There are typically 2 or 3 main, you end up with a duopoly in almost every industry.
Yeah.
And in the duopoly, there's usually a 2/3, 1/3 duopoly is kind of what I've seen a lot of. And that's not always the case, but, and Visa is, 2/3, MasterCard is 1/3. And Amex kind of is its own little beast because they actually provide the financial aspect of it too, which is they guarantee the card. So yeah, I think as far as going back to our original question, the brand itself, I think is very well known. They try to protect that brand by sponsorships and, and when they're sponsoring things, they're sponsoring the premier kind of events like the Olympics, like FIFA, the FIFA World Cup. So they're well known for sure.
I want to come back to this brand question, but I want to pose it here. We don't have to answer this now, but the question I want to pose is, if I'm a credit card issuer, financial institution, is brand let's say everything is equal in terms of the size of the network and things like that. If we only look at brand, is it a determining factor in choosing Visa or MasterCard? I want to come back to that question, but I think it's going to be explained with other things.
Yeah.
But I just want to pose it out there. Okay, let's go to the next question, which is network effects. Network effects in play here?
So absolutely. I think that's probably even above and beyond the brand moat is actually the network effect. So the idea behind a network effect is, for those of you who haven't, don't understand that or aren't familiar with the concept, is a network effect is people sign up for your network because other people are on your network. And so that, think about eBay, right? eBay won't have sellers unless there are buyers, and they won't have buyers unless there are sellers, right? And so in order for the marketplace to occur, you have to have both groups. In this case, Visa has the financial institutions who provide the service, but they have their network effect is actually triplicate because they have the merchants who accept Visa, they have the financial institutions who provide Visa, and then actually at an arm's length is the third group, which is the individuals who use the Visa card, right? And so they actually have 3 posts that they're kind of providing, but the reason that I get a Visa card is that I know I can use that Visa if I fly to Japan or I fly to India or I fly to Europe. I can use my Visa credit card there, right? That's a big selling point for using that Visa credit card. So I don't need to go to Europe, convert all my dollars into euros to use local currency. I can just use my credit card wherever I can, right? So that simplifies my my thinking around it. That has a big impact for a lot of people when they look at a credit card, is how can I use this if I fly internationally? If my card isn't accepted at a lot of merchants, then I now have to use a backup payment method, right? So I have an American Express. I use it exclusively where I can, and then when I don't, I have Visa as my backup, right? And that's telling, because Amex, I think, is a better card. Is a better card issuer for me as an individual. Other people may have different requirements. But Amex isn't accepted everywhere. There are some merchants who won't take it because Amex charges the merchants a higher fee.
Yeah.
And so they don't want to accept that as a payment method. So that's kind of how the network effects come into play here, is and we'll talk about this in the next episode, if Becco and I were trying to make a 4th credit card that could compete with Amex, Visa, and MasterCard, how would we do that? And that's the thing, is the network effects are so powerful here. I can't just walk in and just start making people accept my credit card, right?
Yeah.
So
I think this kind of answers the question that I was posing earlier about brand. Brand, of course, is a strong competitive advantage that Visa has, but more than that, it really is this network effect that really protects their moat. So I think it's super interesting. Network effect is one of those things where if you nail it, it's just so powerful.
Yeah.
It's so powerful.
Visa can screw it up for a long time and still make tons of money.
Yeah.
That's why, and I think we'll discuss this next episode when we're actually going to skip the management discussion, because does it really matter how good the management is when you have a business like that, right? It does to some extent, but just for our purposes, because we want to spend more time on an exercise around the moat. And how we would invert the moat. But let's keep going on competitive advantages.
Yeah, let's do that. A lot to unpack in the network effect of things. And I have a few questions in mind that I want to ask, but let's move down this list. So the next thing is switching costs. Tell us more about switching cost competitive advantage, Ari.
Yeah, so it is there. I would say that you have switching costs with any credit card, but they're not the strongest effect, right? Visa here has a huge advantage in that I can go and get a Chase Visa card, or I can get a Bank of America Visa card, or I can get another type of Visa card. Visa still wins regardless of who the merchant is, or I'm sorry, who the financial institution that supplies you with that card, right? And so you'll see when financial institutions are trying to compete for your business, they're trying to get you a credit card because they make money off of every swipe. And so they'll say, if you spend $3,000 in the first 3 months, we'll give you 100,000 reward points, whatever that is, right? But in this case, Visa is actually the underlying institution that actually processes every transaction. So what they want you to do is swipe the card as many times as you can, because that's how they win, right? So there is switching effects here, because it's hard for you as a consumer to switch away. Like if you're a financial institution, to have Amex and MasterCard and Visa, you typically want to simplify your life, and you have one card one card network that you work on, which has a big impact, right? Because that's how Chase, I think, is all exclusively Visa. They offer hundreds of different types of cards, right? That doesn't stop them from using MasterCard, but for the most part, they're a Visa shop, and I think there is some switching effects, but I think the network effects are where the real power lies here.
Yeah, I think when we talk about companies like this that touches so many different aspects of the financial, or there's so many parties involved in this whole ecosystem of financial transaction. You have the financial institutions, you have the individuals, you have the merchants. When we think about switching costs, I think it's important to identify switching costs for whom.
Right.
And it really boils down to switching costs for the customer, and then switching costs for a customer in this case is switching costs for the financial institutions like Chase and these big banks that offer credit card. And for them, to your point, Hari, it makes sense that you stick with a single company to issue your credit cards. If you have to switch around from, for example, Visa to MasterCard, there will be some pain. I don't know how big of a pain it might be, but there certainly is some switching costs that is associated with switching from Visa to say to its competitor MasterCard.
Yeah, and I think one thing that is a big, Visa understands that you could switch over to MasterCard. In 2018 alone, I think they offered almost $5 billion in incentives to their financial institutions for to reduce their costs. So these are expenses that Visa is incurring to keep people on their network. So they are paying, and they, let's be clear, Visa makes a ton of money. So they're able to offer these services, incentives to actually, keep people within their network.
That's very interesting. Awesome. So let's go down the list.
Okay.
The fourth one is low cost. Do they have a low cost advantage over its competitor?
So I think this one is hard to measure. They don't have a service, the nature of their business provides them a low cost, but it doesn't necessarily apply exclusively to them. MasterCard and Visa and Amex probably make are very, very profitable because of their, because this is a high return on equity business, as we'll look at when we go through the financials. But I don't think that, they're not like a Walmart or something like that where their scale provides them reduced prices. It does to some extent, but that's not how I would classify their moat. I think their network effects, their brand, are two huge, things that at that point actually give you some sort of low cost, because there's actually there's no expense for each swipe of each transaction. It costs Visa, MasterCard nothing to do that, right? But that's the nature of the business more so than the actual.
I also think that it has to do with kind of the strategy of the company as well. If you think about, like, for example, Skechers or Walmart, they are specifically targeting the low cost moat. They want to nail that low cost moat. It right. It's part of the DNA of the company.
Right.
Whereas, in this case, it might be a byproduct of the network effect. It might be a byproduct of just scale, the massive scale that they're able to build up. So I think it's an important distinction, to your point, Hari.
Yep.
Okay. Next is the intangible assets. Any competitive advantage that we can find there?
So they have an enormous intangible asset, which is the Visa network, but I think that would fall under this network effect too. So, if you're hearing me struggle to Visa basically has every moat, right? On, with their business, right?
Yeah.
Because they do have an intangible asset, which is their brand, which is their, it's the mind share that they occupy in the brain of people that financial institutions as well as individuals, right? It's kind of a rite of passage when you are able to get your credit card out of in college or out of college. You're going to get a Visa, right? Because American Express may be harder, they may have a higher credit limit to get it. The things that come associated with that, it's a heavy mind share, but it almost flies under the radar, right? It's crazy to think about that, because if you open your wallet, you probably have a Visa card in your wallet, right? It may be a debit card, it may be a credit card, but because you have that, now you have this additional, but you're not thinking it's a Visa, you're thinking it's a Chase, whatever, right? And so it's a weird concept, right? When you think about it. But if you're going to go get a credit card, you don't really have a choice here, right? You've got Amex, you've got MasterCard, and you've got Visa, and the institutions that are providing the most, support are the ones that are generally on Visa, right? So you're almost left with no choice.
Yeah, it's really interesting because, again, I think it goes back to there's so many people who touch this system. Financial institutions, the merchants, and for us, the consumers, individual consumers. It's interesting because for us as consumers, like to your point, Hari, we don't really care if it's a MasterCard or a Visa. I mean, I'm sure there are people who do care, but really overall, it's more of am I getting a Chase card or am I getting, a Discover card, Right. And then Visa is just a second thought, really.
Yeah.
So there's little nuances that are at play here, which is interesting.
But I will say this: I have never been to a location that accepts credit cards that doesn't accept Visa.
Yeah.
Right. I mean, every place that you go, they accept Visa and MasterCard. Fewer accept Amex, and I don't know enough about Discover because I don't have a Discover card, but. I think that kind of highlights, if they're going to take a credit card, they're going to take Visa.
Yeah, for sure. And this is also international as well. Like you said, the scale of Visa is pretty astounding.
Yep.
Okay. Let's move on to the next question. We're going to hammer this question more in the next episode, but let's just get it out of the way. How durable is the competitive advantage? What are the risks to the current competitive advantage? Again, we're going to talk about this in much more detail in the next episode, but let's just talk about it briefly here.
Yeah, I mean, I think, in short, I think the competitive advantage is incredibly strong, right? I mean, when we talked about companies that we saw, we always pick on like, mall retailers like department stores like Macy's and JCPenney, right? What is their competitive advantage? Well, it was basically the brand, right? Visa has a moat that is so powerful because essentially if I go anywhere, restaurant, a retail store, if I want to buy something online, if I want to do if I want to get, I go to a fair, like a festival or something, and I just want to buy street, food, right? Everybody now has some sort of credit card acceptance, right? Because cash is in the U.S. amongst 80 to 90% of the population is dying, and it's credit cards, right? I know very few people who walk around with hundreds of dollars of bills in cash because they just take their credit cards because credit cards are easy. You don't have to think about how much cash you keep, and so I see credit being a very powerful thing. And I think there's one other aspect of this that we haven't really kind of discussed, which is regulation around financial transactions is fairly strong, right? In order to be, so one thing that I read about PayPal was born before 2000, September 11th, right? So it's September 11th, 2001. Before that, there was less stringent requirements around financial transactions that needed to be monitored for, corruption, fraud, moving money around for nefarious purposes, that kind of stuff. Nowadays, there's a lot of regulation around that. So trying to even get into this moat, to be able to process it is very difficult, right? And so I think because Visa underpins so many things, Amazon couldn't exist without Visa. Walmart couldn't exist without Visa. Basically, anything that you need to do that involves money, nowadays, Visa is part of that discussion. And that means that it's such a powerful aspect of your life, right? And so I think for it to go away is going to be very difficult. Yeah.
The durability of competitive advantage is really, as value investors, that's something that we look for. And this seems like one of those companies that have, impenetrable moat. We can't throw that word around lightly because competitive advantage, you have it at one time point and then, you could really erode away quickly with competition, all sorts of other things. But, this company might be fitting to use that word to describe their moat.
Yep.
Okay, so the next question, and again, we'll talk about competitive advantage more in detail in the next episode. The next question here is, what is the company's long-term prospects on runway for growth? All right, you mentioned some of this, the rise of Visa and the issuance of, you gave us a little bit of statistics on number of credit cards that are issued, the number of transaction that happens on Visa platform. The amount of money that is being transacted on Visa is a third of the world's transaction. I mean, it's incredible the scale at which Visa is operating in. The question is there a room for growth? Can Visa? There's that third of cash transactions that are happening across the world. Is it fair to say that could be, that is kind of their runway for growth there?
Yeah, I mean, I think if you look at your own spending habits and you compare them from 10 years ago to today, right? If you are, you may have walked around with more cash. I mean, I remember even 10 years ago that if I was going on a trip somewhere, even domestically, I would carry $50, $100 of cash with me. And now I don't even bother, right? I don't even try to do anything. I have my credit cards. I'm good to go wherever I'm at, right? It used to be I would go, somewhere with my family to a summer festival here in Houston, and I'd need to carry cash with me because if I didn't, I wouldn't be able to pay for anything. Nowadays, those things are that part of it is gone, and I think almost everywhere now, Stripe and Square are offering services where you can, be your own merchant and swipe cards on your phone, to accept payment and stuff like that. So there's tremendous runway for these transactions that are occurring in cash to go into credit cards. I think that is doubly true for emerging nations. Places around the world want to see that expand to digital transactions, and we're seeing that in big places like India, where there's a cash trying to remove cash from the economy because it's of corruption and things like that. So yeah, I think there's a huge runway for them to continue to operate. And as the GDP of the world continues to grow, as it normally does, how much more of that will Visa capture, going forward? I think there's plenty of runway for them to keep doing this. And let's not forget, as they control more of the payment and infrastructure that, is underpinning the economy, they can also raise prices if they need to, right? The price that they charge financial institutions and stuff like that, which is going back to that low-cost moat. Low-cost moat allows you to raise prices and still people, you're still below the price. So I don't know if Visa could do that safely, or if that would, but when they have enough scale, raising their prices a little bit may actually work for them. So
yeah, it's interesting. It's, it's like this. It's really interesting. It's kind of like double whammy with the network effect and going really deep into the financial institutions and all these other areas that financial transactions occur, and basically collecting tax on every transaction that happen.
Right.
It's just, with these, this network effect and having all this pipelines already in place, they're basically just sitting there collecting tax on every transaction that happens.
Yeah, it's almost like a toll booth, right?
Yeah.
That's another type of moat that we haven't really talked about, which is if you want to be a merchant, you basically have to accept credit card nowadays. Yeah. And if you're going to take a credit card, you're probably going to have to accept Visa, right? It's part of the cost of doing business. So
yeah.
So they kind of do have a moat there, that you would call a toll booth, which essentially is they're going to collect a piece of every transaction that occurs.
Yeah.
Right? So,
okay, let's move on to the next question. Does the company require a lot of capital reinvestment to maintain its business? Can it grow without any further reinvestment? Ari?
So they do have to protect their, maintain their infrastructure and things like that. So of the 26 billion or so that they had in revenue, their reinvestment was only, CapEx was only 700 million, plus about 5 billion in incentives that they paid for merchants. So yes, they do have to reinvest, but there's plenty of runway for plenty of margin for them to be able to spend and continue to grow.
Yeah. Awesome. Let's move on. Does the business have favorable relationships with the following? Customer, suppliers, employees, regulators, community?
So I didn't see any red flags. And, in the interest of time, I don't want to break it down for each one of those. I didn't see any problems. The only thing I would say, and we'll talk about this in the next episode, relates to the moat for Visa is, could the government come in and regulate them because they control such a huge part of the transaction, that occurs? Right now, I don't see any of that, but that could occur internationally. That does happen. So, and that is actually occurring already in China and India, so that China and India have regulated some of Visa to let their own
Union Pay, for example.
Union Pay is in China. To let those flourish, they've kind of had to force control the growth of Visa in those places. So, but yeah, for the most part, I think there's opportunities there. There is a chance that they could be regulated that could affect their business adversely. But that's the only thing that I'd really say about that.
Yeah, great. Okay, I think we've gotten to a good point in our checklist. So let's pause here and then start a new episode where we will talk in more detail about its financials and then valuation, and most importantly, we'll talk about in much more detail the competitive advantage that we talked about in this episode. Awesome, guys. Anything to add, Hari, before we close out?
No, I mean, I think this was a reader suggestion or listener suggested topic. So thank you for sending it in. And if you want us to talk about any specific companies or specific topics on the podcast, email us at info@valueinvestor.org.
Awesome. All right. Thank you guys for joining us today. We'll see you guys in the next episode.
Thank you.
Thanks.